Okay, Rana Gupta is now joining us, and he's Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good morning. Great to have you with us here on the program. You know, we just read out, and we'll have the Lawrence Belanco CLSA call, but that's more from a technical perspective. He's calling for a significant upside on the mid-cap index, the mid-cap part of the market here in India. The Nifty, he thinks, will remain ranged. So large caps range, mid-caps, lots more upside. So I just want you to respond to that. We've had a bit of a feverish kind of rally in the mid-cap and small-cap space day after day now for a few weeks. What's your sense? More to go here?
Look, good morning. Look, fundamentally, if you look at the Nifty, the market index, Nifty has IT and some of the external facing sectors. And there are global uncertainties. There are new technologies coming, which can impact this company's revenue and profits. And also, these companies, I'm sure they will adapt in due course of time, but in this next 3-6 months can be somewhat challenging. And that's why I think on the top indexes like a Nifty, I think their weights will impact. However, if you look at the mid cap or the broader indexes, they have much bigger representation of the domestic sectors like auto ancillary, banks, non-banks, and the consumer sector. And we are also bullish on a high representation of those sectors in the mid cap and the other broader indexes should mean that this indexes should do better than the broader the Nifty 50 kind of indexes.
Okay, so I wanted your thoughts on what's happening with the IT sector. Do you think at some point in time the IT sector will make a big comeback? I'm asking because the commentary that we're getting from managements is still on the weaker side, where there's some concerns about client spending, deferral of orders, etc. What do you do at a time like this? Do you buy or do you avoid?
At the moment, I think it's a bit of a wait and watch because yes, there are delays. There are clients are looking at their IT spend, discretionary spend delayed, but that's more of a cyclical thing. But we also have to understand and assess the impact of something like a generative AI. Our initial research suggests that this could have a bit of a deflationary impact. Now, nothing that the Indian IT companies cannot manage in the medium term. I'm sure in the medium term, they will restructure and respond to it in a way that that they can manage it. But in the very next few quarters, I think because of generative AI, the challenges we remain in a position to kind of ascertain them, and also the IT companies, in our view, they need to also respond to those challenges.
Hi, good morning, Mr. Gupta. Nigel on this side. I wanted your view with regard to what are you expecting from the Fed. It seems the global markets as well, they're quite complacent that there's not going to be any kind of rate hike that's coming about. If we're looking at the Fed tool as well, that's indicating a 70% chance of a pause. A lot of economic data that's coming out of the United States is a little bit disappointing, which is good news from an equity market perspective. How do you see the Fed go about this? Pause and then cut rate later this year? Or do you think they have still one more rate hike in store?
So I think the way many people are describing it, and we are on board with that view, it's a skip. Now, skip essentially means it's a hawkish pause, which means a pause. We don't know about the next move. It could be up, could be down, depends on the data, and which we would think that that's appropriate way to look at, because although there's some sign of economic cooling, but may not be enough or may not be to the extent that Fed would have liked. So I think a skip or a hawkish pause, if you were to term it that way, is what we expect. But let me take this opportunity to point out, Fed, what they do, what they say is very, very important. And in fact, more than the skip or pause, I think more important is going to be their longer term dot plot, which I think will come out after this meeting. But I also would like to take this opportunity to highlight one thing. If you look at the emerging markets, particularly outside China, whether it's India, Indonesia, Brazil, Mexico, they are all showing pretty strong growth and declining inflation. So that puts them, I think, in a pretty good space. In fact, China was the first quarter was strong, but since then they have lost a bit of momentum. So I think the strength and the resilience of the emerging market is something that globally we should take note of.
I like that skip, right? Hop, skip, jump. It's hike, skip, pause. That's some wordplay early morning.
Yeah.
Rana, but it's incredible, right? Rates in the US moved from 0% to 5%, and we are not very far away from new sort of highs on the US indices, right? So should we continue to wait for trouble? Because when I say trouble, I mean recession and a dip, etc. Or you think, how should one approach it? I mean, because it's been a year and a half, right? But it's yet to show up.
So I think, again, the devil always is in the details. So if you look at even the S&P breakdown of the sectors, it is the US tech stocks which is powering the index, right? I think S&P is up more than about in double digits this year. And 90% of this gain has come from the US tech stocks, where investors are building in pretty bullish estimates based on generative AI and what it can do to those stocks. And in fact, it's not even US tech stocks, it's limited to, I think, 5 or 6 stocks, which is driving this rally. But outside that, I think the other stocks are probably, if you exclude the sector and some of the stocks, S&P is flat to 1-2% up for the year. And I think that is all right, because rates have risen, of course. And in US, there's a bit of a time lag before the rates impact, because during the COVID, the corporates termed out their maturity. As you would be aware, in US, the mortgage rates are fixed for longer tenure, as in some cases like 30 years. So it takes time for the rate to transmit to the system. And I think that's what Fed governors also want to say, that they are skipping this because they want to give time to see the interest rates transmitting through the economy. And I think that's what has happened. Also, let me just point out one more thing here, that you have to look at the Fed policy rate. You also have to look at the health of the commercial banking sector in US. Yes, there have been concerns on the regional banks, but the US commercial banks, the bigger banks, continue to be in a very, very good position, right? So I think their advance of credit and how that is going is also very, very important, because that's what determines the health of the domestic economy. So whether the credit mechanism is continuing robustly or not, I think a lot will depend on how the US stock market goes, particularly outside the tech sector.
Mm-hmm. All right, we will leave it at that, Rana. Thanks a lot for joining in. Appreciate your thoughts. And, what stayed with me really is your comment on the tech sector, where you said that the tech sector is a wait and watch, because generative AI could have a disruptionary impact on the technology space. And that's a theme that we're going to take forward in our next couple of discussions as well. We take a quick break. On the other side of the break, our list of top 10 stocks is lined up with our entire research team. Stay with us.